Welcome to the Lend Academy podcast, episode number 115. This is your host, Peter Renton, co-founder of Lend It and founder of Lend Academy. Today's episode is brought to you by Lend It Europe 2017, happening in London on October 9th and 10th. This will be Europe's largest international lending and fintech event of the year, with over 1,000 people expected. Lend It Europe 2017 will pack more content and networking opportunities than ever before into 2 full days. This year's conference features over 150 speakers and one of the largest expo halls in Europe, with over 70 exhibitor booths. You can register now at lendit.com. Today on the show, we have 2 guests, both of whom have appeared on the Lend Academy podcast in previous episodes. I'm delighted to welcome back Emmanuel Marot. He is the CEO and co-founder of Lending Robot. And also would like to welcome back Brustkern, who is the CEO and co-founder of NSR Invest. Now, before we go any further, I should share with you that NSR Invest is part of the Cardinal Rose Group, which is the holding company that also owns Lend Academy, Lend It, and as well as a majority interest in NSR Invest. So now with that out of the way, I wanted to get these 2 gentlemen on because you may have read the news recently that they have merged into one company. They've created now the largest robo-advisor in the online lending space. So I wanted to get them both on the show to talk about what this means, why they did it, what it means for their investors, what it means for the industry. We had a really fascinating discussion. I hope you enjoy the show. Welcome to the podcast, Emmanuel and Bo.
Thank you, Peter.
Thanks, Peter.
Okay, so let's get started with a little bit of background. Both of you have been on the show before, but I'd like to at least get some background about yourselves and also a little bit of background about your company when you started it, how that all that kind of thing. So why don't we start with you, Emmanuel?
Okay, so my background is actually I didn't work in finance before founding Lending Robot. I'm a serial entrepreneur and I worked in internet services. And Lending Robot is something we created in 2013 to automate our own investment. So originally it was just a small script to save time investing on Lending Club. And when we created that, we realized that actually a lot of the loans were gone in a few seconds. And so that individual investors were at a slight disadvantage. We decided to offer the script to other people. And the first users we had were really ecstatic about it. So we decided to make a real product out of it that we named Lending Robot. A few months later, some clients asked us to guide their investment decisions, something we didn't do originally. We were just applying the filters they wanted. So we registered as an investment advisor, and we created a selection model to be able to automatically select the loans and then execute the orders for investing on our clients. So we registered as an investment advisor with the SEC and launched spring 2014 this robo-advisor for this marketplace lending space. Since then, we grew and added other platforms as well while refining our models.
Okay, thanks. So, and Bo, what about, what do you just give us a little bit of background about yourself and NSR?
Sure thing, Peter. I've spent over 20 years in finance. My entire career has been in finance, including as a venture capitalist in Silicon Valley. In 2006, I started my career as an entrepreneur and later joined forces with you, of course, and Jason Jones to form a variety of companies around the marketplace lending industry, one of which was to be an investor in this space and to help people guide their investments more wisely into the proliferation of opportunities that were emerging at the time. Now, NSR Technology, which was formerly known as Nickel Steamroller, was founded by Rocco Galgano and Michael Phillips, who are today my co-founders at NSR. And we all combined efforts to bring a smart technology to the same problem that Lending Robot was addressing, and doing it in a slightly different way. And I'm sure we'll get into that later. But we've been running NSR collectively, including back to the time when Michael and Rocco founded the firm back to 2011. So we've been underway for for 6 years approximately and have accumulated a vast amount of knowledge and capabilities in the space.
Right. And for dedicated Lend Academy podcast listeners will know that Michael Phillips was actually the very first guest on the Lend Academy podcast way back in 2013. So anyway, you can go back and listen to that and see what it was like at the very beginning if you so choose. But anyway, so it's been, we're a few days removed now from the announcement of, the merger of the two companies. I'd like to get sort of your opinion on, what are the strengths of both companies and why is this sort of a good complementary fit for you both?
It's a great question. We've at NSR have always had a great respect for Lending Robot and what Emmanuel and his team have built. They have, from our perspective, of course, as a competitor of theirs for many years, we felt like their user interface was very attractive. And now, after having worked together and had exposure to not just the front end but the back end, we see that they're extraordinarily sophisticated on the back end as well. So that makes us very pleased to be partnering with them in this way. The Lending Robot sort of puzzle piece is all about, from my perspective again, is all about technology. It's about the product. It's about simplicity, and it's really about providing a graceful on-ramp to this very sophisticated asset class. Now, the Lending Robot team has financial expertise, but not the depth to which the NSR team has. And so when I look at NSR and I think about ourselves and what we bring to the table, our technology was really built for the very sophisticated, or I should say just for the more sophisticated investor that wants to tinker more with the investment. There's nothing else on the market like our NSR platform that allows investors to slice and dice the data in a way that allows people to build their own investment algorithms. That remains unique. And that was what Michael and Rocco built from the beginning. So we have very complementary and impressive technology. We have an expertise in finance, an expertise in regulatory and compliance. And also, as you know, Peter, we have industry exposure and industry relationships that I would argue are second to none. The final point I would like to point out is one of the things that we really pride ourselves on, and I'm sure Lending Robot has a very similar philosophy, although much more technology-oriented. We have a people orientation, and under the leadership of the inimitable Summer Tucker, we have a insanely good customer service department. So those things, when we combine them together, we both believe are very powerful.
Okay, yeah, that makes sense. So Emmanuel, do you have anything to add to that?
Not much. I do agree with Bo that actually we are very complementary, and none of the people who are working at Lending Robot actually before they came worked in finance. So it's great to be able to join forces with people who way familiar than we are with the immense amount of regulations and constraints in this industry.
Okay, that makes sense. So I guess a question, you sort of pretty much answered the question of why do this, but I guess the second part to that question though is why do this now? Is there a reason? Like what's the timing? What's behind coming together now?
Yes, we see this asset class marketplace lending as still having a lot of promises, and it's reached a certain maturity, but at the same time it's also becoming more complex. We see more and more platforms emerging every day, and some of them are really, really attractive. So it makes it even harder today for individual investors or even professional investors to actually access that asset class. And we think it's important to provide them a tool that allows that to access that investment class with both good returns and profit from all the sophistication we can provide in the tool. And so that means that we need to put more effort in this. We need to continue building a tool which is both technically solid, with very strong models for selecting the investment, but at the same time with a customer relationship, with a knowledge of what the people are looking for, which requires the combining of those two companies.
Mm-hmm. Okay, that makes sense. So So can you give the listeners a little bit of an idea of the scale of the combined company? I'm interested in total assets, total number of customers, that kind of thing.
Sure, I'll take that one. So with the combination of our companies, we will be approaching 200 million in assets, and our total number of customers will be over 10,000.
Okay. That's quite a lot indeed. So, and what about the profitability of the combined company? Are you guys raising money? Are you profitable now, or where are you at?
It's a great question, and it's very topical, I think, for everyone in this industry, is sustainability of the company itself. And I'm very happy to say that we are profitable, and we are not raising money. We are very focused on a couple of things, and that is not to, promote our equities for sale, but to promote the products that we have for the investing public, to get back to the business of investing for our clients.
Mm-hmm. Okay.
I would add to that since we're a robo-advisor, we're probably the only profitable robo-advisor.
Yes, indeed, you probably are. Okay, so I want to dig in a little bit into the Lending Robot series, Emmanuel. You launched it earlier this year. It's a pretty unique offering. So maybe we could just get started, because many listeners would not be familiar with it. Can you explain what the Lending Robot series is?
Sure, with pleasure. So we looked at what we thought were some drawbacks in investing in marketplace lending platforms today, and we found a couple of things that we think could be improved. Investing in multiple platforms, it's required to build a diversified portfolio, but it's super complicated. I mean, you, Peter, you invest, I guess, in I think, a lot of different platforms, and your tax returns are a nightmare, right?
Yes, they are.
So we want to, and some people may not have the energy for investing in marketplace lending as you do. So there's this. We want this to be simpler for tax return and the like, and we wanted to increase the liquidity. And the lack of liquidity, I think, is a big drawback in this asset class. So classically, if you want to wrap everything together, that's what a fund does. There's a few things we don't like with the fund. And so Lending Robot Series is an attempt to actually provide the best of both worlds between investing on your own directly on the platforms and investing through a fund. So unlike a fund, it's flexible. So you can go down as to select which notes you want or even which platforms you want, but you can select what's important, which is how comfortable are you with risks? Are you very conservative or are you aggressive? And what's your time horizon from investment? And from then, our machine learning algorithm will actually take it from there and decide and allocate the money in those various platforms, and then for each platform, select the best loans matching your profile. The fund is also often a bit opaque, and that's something we are not comfortable with because we know lending robot clients want to see exactly what's happening in their accounts, even if sometimes that means they get 20,000 different notes and they want to dive down in this. So what we did with Lending Robot Series, which is structured as a fund, is actually it's notarized in blockchain. So every week we record the list of all the notes we own and what's happening with them, what's their status, how many payments they made, what was, like the FICO score, debt to income at origination, all the data, and we notarize it with Ethereum smart contracts. And we provide this in a way which is very, very transparent. Any of our Lending Robot Series clients can go to the website and dive down to see all that data. And because it's notarized, they know we cannot do anything with that data. We cannot lie on the returns. We cannot pretend that we did not invest in a bad loan. And the last thing is the liquidity. And the way we try to improve liquidity on Lending Robot Series is by letting people actually decide if they want to exit at any time. It's a switch on the website. They don't have to wait like a quarter for redemption or something like this. And then what will happen, because there is no true secondary market for that asset class right now. So what we do, we don't resell the notes. We do distribute in priority the loan payments to clients willing to exit. So between 33 and 100% of all the loan payments coming into Lending Robot Series is wired in priority to people cashing out. So based on our estimation, it's possible on average for a client to exit Lending Robot Series in about 3 to 4 weeks. The absolute worst case scenario would be that everybody wants to exit at the same time, But actually, that's not a problem because then what we will do, we will just pass on all the loan payments coming from the platforms. So that means that best case scenario, you can exit in as quickly as 1 week. Worst case scenario, it will take, let's say, maybe around 3 years for loans that are investing on platforms like Lending Club.
So I just wanted to say, what are the platforms that you're investing on?
Yes. So right now, there are 4 platforms. Consumer credit, we get Prosper and Lending Club. Small business loans, we get Funding Circle, and real estate, we get Lending Home. But Lending Robot series is built in a way where actually it's kind of quite extensible. And looking forward in the future, I think there will be more platforms integrated in it.
Okay.
Peter, I'd love to just jump in briefly to highlight a couple of items that I think are super interesting about what Emmanuel just said, if I may. So the series fund, I think of as almost a platform in and of itself. And we really believe that this is the future of fund management. What Emmanuel created is, I think, genius. It creates within a specific framework not only customization on entry, but flexibility after investment. So an investor can come in and say, I was long-term aggressive and I want to shift to short-term aggressive, and they can do that within the fund. That is really, really interesting. The second piece is that weekly liquidity. That decision can be made not with, 90 days notice with a buy and sell or something like that, and not with a 30-day exchange, but it can be done on a weekly basis, which we don't encourage our investors to do, obviously, but that is really impressive that Emmanuel has created a structure that allows for that. And then the blockchain-enabled transparency and that immutable record should give investors real peace of mind that what's going on in the fund is absolutely fact, right? What is published on that weekly NAV is a factual record, and it is repeated out in the blockchain. So it is stored in the blockchain. So those elements of the Lending Robot Series Fund we think are super exciting. And as Emmanuel said, it's a platform we can build on top of that, and we expect to fully.
Okay, so I just want to dig in a little bit more because one thing you said, Bo, was that you can switch from long-term aggressive to short-term aggressive, and I imagine conservative to aggressive, what have you. But can you just maybe back to you, Emmanuel? How does that work in actuality? I mean, are you when someone says, "Okay, I'm long-term aggressive," what are you investing in? And then if they want to change to short-term conservative, for example, how does that work?
So today in Lending Robot series, there are actually 4 series: short-term conservative, short-term aggressive, long-term conservative, and long-term aggressive. So you can imagine them as 4 different funds, independent. Mm-hmm. They do share the same kind of models, but they have specific parameters. So the way we will score a loan for, let's say, a loan which is on Funding Circle for short-term conservative, the same loan won't be scored the same way for long-term aggressive. And the allocation between the platforms will differ. Of course, the shorter the duration, the more we will try to invest in platforms that have loans that are, let's say, 12-month duration. If you're long-term, then we may go as long as 5 months on some Lending Club or Prosper loans, for instance. So what happens when someone selects, let's say, easy case, they want to invest 100% in long-term aggressive, is once their money is deposited in a Lending Robot account, we will issue units of ownership into the long-term aggressive fund. And the issuance and redemption is done on a weekly basis. Now, let's say 2 months later, that person decides that actually maybe they will need the money than expected, and now they are switching to, let's say, 50% between conservative and aggressive. Now, what happened is our system will determine that person has an excess in long-term aggressive, so it will automatically cash out the money from the long-term aggressive fund using the same mechanism that I explained before. So all the money coming back from loan payments is distributed in priority to people cashing out. And in that case, the client is in a way cashing out of the long-term aggressive, and the money will be put into, let's say, the short-term aggressive fund, for instance. So that will be done automatically at any time. The clients can go to our website and see what is their target and what is their current situation vis-a-vis that target. Mm-hmm. So after a few weeks, automatically, the person will have 50% in long-term aggressive and 50% in short-term aggressive. And we send weekly emails explaining exactly what happened in the series they have invested in, how many loans made payment, how many defaulted, how many were fully paid and the like. And clearly, obviously, showing them exactly how much they have in each of those series.
Mm-hmm. Fascinating indeed. So I presume this is just for accredited investors, correct?
Yes, that's correct.
Okay. So what about non-accredited investors? Because obviously we have the Lending Club and Prosper investors that don't necessarily need to be accredited. So what are the what will be the choices for these for non-accredited investors in the merged company?
Well, as you mentioned, Lending Club and Prosper are for retail, and on this kind of we are really tied on the platforms, right? If tomorrow, I don't know, Lending Home decided actually they become available for retail investors, and we'll be happy to welcome retail investors. Otherwise, we're stuck to the platforms allowing retail investors. And as you mentioned, the two biggest ones are Lending Club and Prosper. On those, we came with different products, both on Lending Club and Lending Robot, and NSR, and there is no point today to disrupt that and tell one set of those clients, look, you really have to move this other way. So I guess it will make sense at one point for those clients to move to one platform or the other, but we want to do it because there are some features that are interesting enough that actually are motivated to move. We don't want to push them out for the moment being. And so the Lending Robot client and the NSR clients that are retail investors and for whom we automate investment on Prosper Lending Club, they will be able to continue using the platforms they want.
Okay, great. So then what do you say is the value proposition today for your investors?
So the value proposition remains very much the same. We're providing solid returns. We're providing a predictable risk and very simple access. The value prop for investors, we think, is very strong and will continue to be uncovered and discovered by what was the innovators, what we're crossing into sort of the early adopters and early majority, and then soon sort of, the masses, I believe, will be very attracted to this asset class, just like those have in the past decade. The value prop for the industry is kind of interesting as well. There are a lot of originators out there that would love to have the stability of a retail investor base, but it's extraordinarily expensive to build a retail investor base. And, Lending Club did it very successfully. Prosper has built a retail investor base, and there are a number of others that are in both small business and real estate and other asset classes that are attracting individual investors. And those individual investors are very much valued by the originators. They're much more stable and they tend to be more loyal over the long term than a large institutional investor or a hedge fund. So we have a couple of value props. One, of course, to the individual investors, we're providing that stable, attractive return, and also to the industry, we're providing the aggregation of individual investors. We're providing that stability, but those origination platforms can approach one entity now. It's the NSR and Lending Robot entity that can provide those individual investors en masse.
So can we tease that out a little bit? Like who the target market, the target customer today? We obviously this industry is now over 10 years old. Who really is what is the kind of profile of the target customer today, and how is that changing?
I think if we want to summarize who are today the NSR or Lending Robot clients, two words: smart people. To elaborate,
I knew I knew that was the reason I was a client, right?
Yeah, exactly. Smart because I say that because it's people who actually are sophisticated enough in the way they manage their investment to realize the potential of marketplace lending. And they realize that with bonds being positively correlated to stocks for the last 15 years, it's not such a good choice for diversification. And so most of our clients realize that, and actually they come to us because they're like, okay, now I want to diversify part of my portfolio into this asset class. And at the same time, maybe they're also sophisticated enough to understand that it's a full-time job. And some of them want actually to do it on their own on the like, but otherwise they were like, okay, I understand I have interest in investing in this. I should invest in marketplace lending, but I don't want that to be my full-time job, and I don't understand enough of it, so I want professionals to do that for me. And that's what basically NSR Lending Robot is doing. It's not a traditional financial advisor. We don't necessarily have beautiful offices where we receive clients and the like, and we don't talk that often to clients actually. So it's very technology centric, which also attracts, I would say, a certain kind of people. We have a lot of entrepreneurs. We have a lot of developers, for instance, and high-tech entrepreneurs in our clientele. How that will evolve, I think there were a lot of people who were on the verge because they were like taken aback. At the beginning, it was a new asset. And when you think about it, people lending money to other people they don't know, that seems borderline stupid. So it required a few years of real returns and seeing what was going on for people to really think that actually that's a solid asset class and it's here to stay. And so maybe we will need people to be slightly less smart to be attracted now to this, or it will become slightly more mainstream.
Right. That makes sense. So I'm curious about branding. You've got, Lending Robot's a strong brand, NSR Invest is a strong brand. A lot of people know these two brands in our space. So, and how are things going to be managed going forward?
It's a great question. For the time being, we're keeping both brands. NSR Invest and Lending Robot will operate seemingly independently, and our clients will of either entity, may not notice an immediate change. Our focus for the immediate future is really on integrating the technology and creating more attractive offerings to our current client base and our expanding client base. That's really the most important thing that we do. We're going to emphasize brand, and we will be very careful about that. But that's not going to be the first thing we do. So I would say on that score, stay tuned.
Okay, so then what do you think then this company is going to look like in 12 months' time?
Yeah, so in 12 months' time, I think we'll find that there is a real client-centric approach to our integration, and that there will be one company, one brand, one technology base, and one very happy and hopefully quite large client base. We will, we're going to emphasize all the good of both companies and really spend a good full year of consolidation. Actually, our plans are to make that consolidation much sooner than 1 year, but let's just call it a year. Beyond that, there's a lot of work to do. This industry is still in its infancy, and we think that there's a proliferation of investment opportunities, more so than when Lending Robot and NSR certainly were founded. And that proliferation will continue. We think that the investment opportunities will sometimes be proprietary. They may not actually be, marketplace lenders from a technical definition perspective. And we believe it will be our job to bring very interesting investment opportunities to our clients that they would not otherwise find or be able to invest in easily. So the whole idea of alternative lending or alternative investing, if we broaden the aperture a little bit, is absolutely here to stay, and it is absolutely a growing phenomenon. So, and we've referred several times to this, smart tech-savvy investor that may be a little bit of an early adopter. That individual is leading the way for us and helping us decide, okay, where are the exciting asset classes and where are we going to lead our investors? And behind them come the masses of investors. And so at some point, I think, just circling back to the beginning of the conversation, where the dream of the company is we become the Charles Schwab of alternative lending. Mm-hmm. That is absolutely in our future. And it is not going to happen overnight. This is a long business plan that we're building, and we believe this is a very important step in our maturation. And so we're super excited to be joining with Lending Robot and creating an enhanced experience for our combined client base.
Okay, so we're almost out of time, but I just want to get both of your perspectives on something before we sign off, and that is like, when you look at this, when you look at marketplace lending, it's still some, as you said, Bo, it's still in its infancy, but in many ways it's obviously way more mature than it was, when I started in 2009. So maybe let's start with you, Emmanuel. Where do you think this asset class is going in the future?
I think it will become increasingly boring. Boring is not necessarily a bad thing in terms of investment.
No, it's not.
I think it will become more boring because, with this whole idea of peer-to-peer lending and small guys lending to small guys is kind of, that train left a while ago already. And we see more and more institutional investors accessing those platforms up to a point where actually a tool like a vehicle like Lending Robot Series is needed to have an access to those. So, and the models themselves need to be more and more sophisticated to continue providing good performance. So, in a way and the market is not growing like it used to be. Remember those years where it was more than doubling every year. It was insane. Mm-hmm. So, in a way, that's why it's also becoming boring. And the good aspect of the boring is, we know the returns. There will be probably very, very little surprise on those, and those returns are still very excellent, and we see very little correlation with other assets. And as more and more platforms are launched or mature in this market, there will be even more diversification and even more boring returns that will be exactly the same number month after month and year after year. And in a way, that's all we can wish to our clients.
Mm-hmm. Okay, Bo, you have the last word.
Well, I'd like to thank you, Peter, for inviting us to this podcast. It's been a real pleasure, and I'd also like to thank Emmanuel for trusting us to be the stewards of the technology and the business that he and his team built. It is in good hands, and we're really excited to be merging and taking over as the stewards of the Lending Robot technology and series funds. So as for what's to come for the industry, I think we've touched on this, but it's worth underscoring the importance of the investor aggregator will become more and more pronounced. What Lending Club was able to do, and Zopa before them, right, back in 2005, is not, I honestly believe it's not to be repeated. There will not be another Lending Club that is willing to build a system that can, create these mini IPOs and issue them thousands upon thousands at a time and fractionalize them down to the $25 slug for retail investors, barring some big regulatory change, from the SEC. It's just not going to happen again. So the originators that are proliferating now, a lot of them do have an emphasis on retail, as you know, they or the individual investor, retailer accredited. And yet it won't be fractionalized in the same way as Lending Club, Prosper, and some others have in this country. So our role as investor aggregator and as builder of financial products like the Lending Robot series will become more and more important. And so I think we're right on trend. And I think it, of course, with all good things, it takes time to see how they see how these things play out, even in the technology-enabled industry. But this is my firm belief, and we're really excited to see it unfold.
Okay, well, on that note, we'll have to leave it there. I very much appreciate you both coming on the show today. Thanks, Emmanuel. Thanks, Bo.
Thanks, Peter. Bye.
Thanks, Peter. Bye.
Yep. See ya. So obviously, I have a vested interest in the outcome of this merger, as my ownership stake in Cardinal Rose Group, which has a majority interest in NSR Invest, as I disclosed in the introduction. But if I put my investor hat on, and I've been an individual investor now for over 8 years in this space, and I love the evolution of the tools and the the opportunities for individual investors. And I feel like Lending Robot has had this great system of highly automated investing, really adding value to the investor, allowing them to invest across multiple platforms. NSR Invest has had a similar approach in some ways, but really is focused on the tools and helping the investor really understand what they are investing in. I feel like it's a great match. I'm excited about it. I think it's going to help serve the individual investor, and that's something that I will always support, because I still firmly believe in the role of the individual investor in this space. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. This episode was sponsored by Lend It Europe 2017, Europe's largest international lending and fintech event. It will be held in London on October 9th and 10th of this year. To find out more and to register, just go to lendit.com.